On Wednesday, the Australian dollar was walloped down in the area of 1.5% against the buck on the day. The New Zealand dollar sunk in sympathy, though setbacks here were less intense, with Kiwi only down about 0.6%. And as far as the rest of the FX market went, not much at all in terms of any movement. Aussie weakness came early in the day, with Aussie longs forced to seriously reconsider exposure after RBA Governor Lowe painted a completely different picture than the one that had been perceived in the RBA decision just one day earlier. Lowe said rates could go in either direction, acknowledging risks on the domestic and international fronts. While the euro wasn't down all that much, it did manage to give up the 114 handle after German factory orders came in much weaker than forecast. At the same time, however, there were components within the data that were far more encouraging than the picture the headline data was painting, which helped to provide some support for the euro into dips. On the Brexit front, there hasn't been much in the way of any new updates, though there has been a lot of talk about cabinet ministers' discussions to introduce a plan that would delay the Article 50 trigger. This discussion that we've heard, the latest talking about an 8-week delay. U.S. trade data came out on the solid side, but didn't really factor into price action. Looking ahead to Thursday, the calendar is quite active, with most of the action in the European session. On Thursday, we get Kiwi employment data, German industrial production, the ECB economic bulletin, and European Commission forecasts, a meeting between Theresa May and the EU's Jean-Claude Juncker, the Bank of England policy decision, and BOE Governor Carney. That's all for now.